audio part of it is probably more important. I normally do these, and again, I'll stay as long as you want, we'll do it however you want, but what we generally do is go through each chapter and make sure that you and I agree on what is the most important material in that chapter. And then what we have typically done was go through the exams that were posted and any questions you might have there. And we'll do as many, as few, or as many of those as you would like. And then we typically make sure that before we leave here, we've taken a good hard look at those takeaways. Because I put those together for obvious reasons. The same reason everybody else does takeaways, right? These are the things that you really need to come out of this chapter with a reasonably good understanding. So, if that'll work for you folks, we can do it that way. Does that sound appropriate? If any of you have any suggestions, otherwise, I'll be happy to listen to them. This seems to have worked well over time. What was the big stuff in Chapter 1? The goal of the firm would be one of the bigger things that we got out of Chapter 1. And again, once we understand that the goal of the firm is the maximization of shareholder wealth, we realize we're dealing with what type of business form. What type of corporate organization? That would have been a good question. At any rate, that's correct, right? So we are dealing with corporations for the most part. And again, many of you are familiar with LLCs that are treated as a variety of different types of organizations, but we have a tendency to worry about corporations because they have a tendency to be the great big organizations out there for a variety of reasons that we talked about, right? Limited liability, the ability to raise significant amounts of money, an ongoing institution regardless of what happens to any individual shareholder, et cetera, et cetera, et cetera. So you guys are pretty familiar with that, I would assume. What else in 1? Talk about agency situations, right, where managers are expected to act in the best interest of shareholders, that principal-agent relationship, and we know that it does not always happen. There are significant incentives personally, right, to do things that might result in your wealth maximization as opposed to the maximization of wealth of your shareholders. And so we have methods, one positive, and that was structuring compensation plans such that the upper management of the company cannot become wealthy unless the shareholders do at least reasonably well. And some compensation plans have been very well structured in that regard. And there are a couple of negative things we talked about. One would be firing the CEO. It's happening much more often now than it did a generation ago. And the other would be the not doing things at the corporate level to stop the possibility of a hostile takeover, right? Because hostile takeovers will take out poor incumbent management to the benefit of the shareholders. That all sound familiar?
What's a poison pill again?
What is a poison pill? In this context, right? Technically, a poison pill is something the astronauts carry, right, so that they can die more humanely than suffocating in space. Spies ostensibly carried poison pills, so they never gave up the Queen's secrets when they were cornered. Well, what is a poison pill in this context? Poison pills are very detrimental.
Golden parachute kind of thing?
Say again?
Like a golden parachute?
Well, poison pills tied to golden parachutes are much more effective than poison pills not tied to golden parachutes. But at its gut level, what is a poison pill?
It's an agreement between managers to, I guess, leave to the detriment of the corporation.
That would be one type of poison pill. There are others. That's the one that I point out because most of you know where Dayton is. Okay, it's the one that NCR used. But a poison pill is anything that is set up that causes significant detriment to the firm if a hostile takeover is launched. Some of them are, all the debt of the firm becomes due and payable the minute a hostile takeover is launched, and there are a variety of others. In some cases, bylaw changes kick in that are detrimental to a company trying to take over another one if and only if the takeover is hostile. Understand, poison pills would never kick in, right, if I can agree to acquire your company. That once the word hostile is removed, all of these things are moved. But that's what a hostile takeover is. Now the one back to Dayton and back to NCR, the thing that made their takeover canvass so successful was the fact that people knew these folks would leave. Because they knew that if they, remember that it was the top 20 some odd people in the company who were going to walk out the door in the event of a hostile takeover. Well, ordinarily part of this golden parachute to walk out the door was so substantial that people realized that they'll leave. They'll leave. It was a very effective poison. And as a matter of fact, it was a negotiated takeover of NCR when it ultimately occurred because no one was going to go after them in a hostile manner. It was just too risky. What else in one? That may be it. Bengals fan? Is your car orange and black? Are they winning?
They are, by 3.
Okay,
It's just the beginning of the 4th.
I saw the blimp over there, so I assumed they were playing at home today. The blimp's been in town twice now. They were here for the Reds and, yeah, so, is that what it was? The
All
baseball
weekend.
game? Yeah. Oh, were they there all weekend?
The blimp was here all weekend, yeah.
Okay, because I saw them for one game when I happened to be here, but, I guess that would make sense once you get a blimp somewhere. They're not the most high-speed operations to move around, I would think. Anything else in one? What about 2?
Different types of markets.
Say again?
Different types of markets.
We talked about money markets and capital markets. We talked about primary markets and secondary markets. I believe we probably talked about levels of efficiency. Did we not? We formed semi-strong form and strong form. Okay. We did not talk about international stuff. We have an entire course in that area if you'd like to know more about it. We did not talk about taxes because this book is at least a year old. You know, they typically update these every 3 years, and I guess is half the tax information there's outdated in.
So we don't have to worry about those.
Excuse
We
me?
don't have to worry about those.
No, there's nothing international, and if you look at the sample tests I posted, you'll notice there's nothing in there tax-related, and there's nothing in there. We will talk about taxes at length going forward, particularly into capital budgeting, but I will give you a tax rate, okay? And 99% of the time, I'll let you know, the secret is 40%. Now we've fallen in love with 40, but we have. Anything else in 2 that you can think of? What about 3?
All the ratios.
Yeah, all the ratios. Remember to bring your sheet of ratios.
Which page were we allowed to photo?
I don't know, what is it? Probably, how many of you have the very latest edition? I think it's the 11th. Because the 10th, I think some of you, it's 88, yeah, some of you may have the 10th. It's the thing with all the ratios on it. I mean, you'll find it in there somewhere. Somewhere in the high 80s, I think, in both.
87.
87, 88, okay. Yeah, make sure you bring this. You don't want, I don't want you guys, as I said, memorizing ratios. That is not at all.
Can we write this down and bring that paper, or does it have to take out the copy?
Say that again?
Can we write it down and bring it? Or
Sure, as long as that's all you write down. Okay, if I ask you what I mean by the crap and gap, could you explain that?
What is that?
Remember, that's the fact that you can have a huge number, you can take a trial balance, right, for those of you who are not accountants, you might not know what a trial balance is, but it's where you start typically. And you can take that, and depending on which method of depreciation you decide to use ultimately, which method of inventory valuation you decide to use, which method of revenue recognition you decide to use, you could have 2 companies that are doing exactly the same thing, and their financial statements can look so completely different. It's remarkable, and yet everything would be in complete compliance with generally accepted accounting principles. This is why some of these stock analysts that you hear about earning significant salaries because they can actually take the financial statements of a variety of different companies in the industry they follow and put them on comparable terms, which is very difficult to do. Okay.
What
Again,
did you say that was? What did you say that was?
I refer to it, and I think I told you where the crap and gap came from, right? There's a friend of mine who's an accounting professor that actually teaches a class in the month of January at a college in western Pennsylvania that is now, so it's enrolled past the day Tom will die, I'm sure. He's not an old guy. But the CPA firms in Pittsburgh have fallen in love with this class, and they send their poor people, who probably just got out of college to begin with, back to college. They live in a dorm, eat college food for basically the month of January, because this institution has what's called a 414 calendar. They have a January